Hi guys, it's Doc Severson for the TheoTrade report for Thursday, February 9th. I'll start out today's report looking at the S&P 500 monthly, weekly, and daily chart, and I would say we are almost there. We are almost there, but today was another opposite day. What do I mean by that? Well, really, since the election, which is right there, we've rallied like crazy from about the 2100 level. We put on more than 200 points during that time. And all the while, everybody at every turn is waiting for that one magic, disastrous tweet that comes out, which makes everybody sell off the S&P for another 200 points. It hasn't happened yet. In fact, the opposite keeps happening, where Trump keeps tweeting out or communicating exactly what the market actually wants. In this case, today, it was a tax plan. Corporate America has been begging for a decent tax plan for a number of years, and it looks like they may be able to get it. And according to him, it's coming out in just a couple of weeks. Now, that could be actually the news that sends the market down into at least the next range, I think, here. Because we're getting awfully close. We're getting awfully close now to full exhaustion across the board, at which point usually markets do not trend anymore. Now, we still have a little ways to go on the S&P before this thing goes into a multi-year consolidation, much like what we had here. So that was caused back here by this crazy rally that we had 2013 into 2014. Okay, so we ended up with that missing bear market, which in my mind is just this consolidation. Markets can consolidate either through price or time. It shows time instead of price. And so this one is still valid. We're not missing any bear markets out there. But I think a little bit more upside on the next positive note, perhaps when the tax plan is actually released and revealed, that will be the ideal time to sell into the news. So buy the rumor, which was today, sell into the news, which is a couple of weeks from now. Now, looking at the S&Ps today, everything was generally higher except for the utilities, which were strong the last couple of days. So energy was strong. Financials was very strong, was actually the biggest performer of the S&P. Industrials, technology, consumer staples. And again, there's the utilities, which got pummeled today. Healthcare and consumer discretionary was also up. So speaking of the financials, actually the financials chart is one of the ones that's probably setting up for the largest upside potential here. So you can see that after all of these years of Dodd-Frank and the resulting regulation and kind of like keeping down the banks, keeping them in check, I think we might start to see them, at least the rumor right now. We'll see whether or not that actually passes, but the rumor right now is that they're going to let them loose from the gate, in which case this is an extraordinarily bullish pattern here, this small, tight flag. You don't see many like this at all, ever. And so typically these show up as about the halfway point. Flagpole, flag, and then the remaining move up to the top, which is going to put it very close up to 30. So I think we have a lot of potential from here. Now, this has not left the gate yet because this is like swimming with a big 20-pound anchor, trying to tread water, right, with a 20-pound anchor on your foot. But this is going to, I'd say within the next 2 weeks, this is going to be completely cleared and back up here and ready to trend again. The financials may not wait for that to occur just because some line on some chart says that it should be exhausted and not moving. But if we start to see a breakout above the $24 level, there may be a lot of short covering as well as people jumping on this one. This is a relatively inexpensive ETF and could be a big, big magnet for retail funds. Now, if we zoom into the S&P 100 of the S&P, we can see a lot of green here. There's very little red that actually got punished today. Intel was probably the most notable of these, but a lot of energy stocks, which have been pounded lately, are starting to rebound. So energy, financials, big drivers of the market. You can see BAC here Halliburton, Goldman Sachs, among others, MetLife, Morgan Stanley, Nike. So while this party goes on, the bulls are feasting right now and are probably getting a little bit euphoric, as well as the fact that we're seeing all the skeptics get bent over continually with this as they continue to wait for the Trump tweet that kills the market, which is, again, opposite day. It's just not happening. So I think once we start to see actual plans and actual policy news coming out, more than just a border tax, that might be a chance for the market to pause and come down into that range. But meantime, again, you can see like Costco here, we've actually the China ETF FXI has been on a tear lately, the last few days here, breaking out strong to the upside. Okay, so maybe indicating that trade may be on. We're starting to see some of those infrastructure plays like United States Steel. And this is just a classic breakout from a bull flag here. So this flag pattern, which was in play for the last several weeks, building up a huge amount of energy and starting to break out here, not waiting for the weekly chart to kind of recover from this. So we're starting to see these breakouts here from stocks that have been consolidating for quite some time. Another example of that is Nike here. So Nike's just been pummeled, punished, and done everything to for the last couple of years. And we're starting to see this break above this descending trend line, which is a good sign for recovery. We'll see whether or not this can get anywhere. But certainly a lot of energy and still a longer-term trend favoring Nike right now. So if you're long, keep those stops tight because it can turn around at any day and start to set up into that bigger range that I've been talking about. That's it for today's report. Have a great day. See you tomorrow.